Hello guys, welcome to the pre-market overview today. So I was just checking the streaming there. Today is October 14th, 2020. So welcome to the pre-market overview for today. Today is Wednesday, so happy Wednesday to you all. Hopefully the markets have treated you well so far this week and will continue to do so. So what we're going to do today is same as what we always do. We will go through our newsletter. So our newsletter is a document that is sent out every day, Monday to Friday, before the markets open. If you want to subscribe to get that newsletter for yourself, you can email us newsletter@tradewithufos.com. So just a reminder of other email addresses. I'm just going to move my mic so you can hear me a bit better. Just to show you some other email addresses that are important. You've got my email address there, becky@tradewithufos.com, but the most important is support@tradewithufos.com. If you have any questions on anything, those guys are the best. So email us support@tradewithufos.com. A reminder, today is a Wednesday, so you will have futures at 9 a.m. Eastern and then options at 1 p.m. Eastern. Normally, we have stocks and investing on Tuesdays and Thursdays, sharpening sessions over the weekend. Sharpening sessions, one will be a psychology session and one is a methodology, reinforcement, questions and answers kind of session. So that's for within the Tradective channel for those that may be new to the channel or thinking about trialing or something like that, so you know what we do on a weekly basis. In terms of courses, so these are understanding things from the bottom up, from the foundation up, understanding our methodology, how we apply it to different markets, building our trade plans, backtesting them, and also managing what is between our ears when it comes to our trading psychology. These are the courses that we do. So we're currently on a psychology class, which will be finishing this Friday. Then we have futures starting this Saturday. That's October 17th that it will be starting. Then we have trading plans, stocks, and back testing. So these are the upcoming classes that we have. I'll show you in a minute where you can go to look at those a little bit more and understand in a bit more depth. Before we do so, we need to put the disclaimer on the screen. It moves through reasonably quickly. You might not be able to read it as quickly as it's on the screen. If not, you can obviously come back and pause the video and look at it there, or you can go to youcantrade.com to get additional disclosure information on there. It's important that you guys understand it, not just for legal reasons, but it is generally good advice to understand that, of course, there is a risk involved when you trade. Ultimately, it is up to you to decide what trades you place, when you place them, what money you use, what capital you use, etc. We can help you with educational content, ideas and demonstrations, but otherwise it is up to you to make that decision on the trade you place. Okay, so if you go to www.youcantrade.com and choose the Tradective channel, then you will see that you can trial the channel. That's where everything that's on the left-hand side on that intro screen where we saw the different sessions we do on a daily basis. You can schedule a clarification call if you'd like to speak with somebody before you start your trial. You can also browse courses. If you click on that button, it will open up a separate page and show you the different courses that we do. So that's stocks, futures, psychology, backtesting, and trading plans. Click on course details for any one of them. You can learn more about them. And again, you can schedule a clarification call if you'd like to speak with somebody before you register for that course. If you click on that button, a little window will pop up. You just need to put in your name and email address so that we can send you a link to that callback. And you will schedule the date and time that suits you for that callback, and we will be there at that time. And you just need to use the link that's on your email to get there. You can put some questions in advance if you want to, or you can leave that bit blank. As soon as you click request, you'll get a little pop-up to say that it's been done, and you will receive that link in your email, and then we will see you on that call. One more reminder. We are on the App Store, so you can join us mobilely if you'd like to. So if you search You Can Trade within the App Store, then you'll see us there and can follow us on that. Okay, so that's introduction done. So let's crack on and look at the newsletter. So this is the newsletter. This is what we send out every day, Monday to Friday, before the markets open. You'll notice we go through 4 of the major markets in the world. We have the S&P, oil, gold, and the euro. So major markets, lots and lots of orders move through them. Even if you don't trade them directly, I'm sure a lot of what you trade will at least be correlated to or impacted by what goes on in these major markets. Now you'll notice that we go through a daily chart for each of them. Of course, different things happen on different timeframes, but the daily chart is one of the most commonly used timeframes in the trading world, if not maybe the most commonly used timeframe. And again, the daily chart might suit with day trading or swing trading or longer term trading as well, depending on how you use it. Now, for each of these markets, we're going to look at a variety of concepts. The first thing is climate. So climate essentially means trend. But it's more importantly, it's what direction is the market going in, but what are the probabilities associated with that? That's what climate means. So we use technology to help us out with this. We use our Auto Climate app that analyzes market data for us and comes back and tells us what the direction is and what the probabilities associated are. So this is the Auto Climate app. I'll show you this per market. It's on the bottom of the chart for each market. On the Auto Climate app, it will analyze market data and come back with one of three things. So it could show us a thick blue dot that tells us that we have a confirmed upwards climate probability to the upside, upwards trend. It could show us a thick red dot that would tell us that we have a confirmed downwards climate probability to the downside, downwards trend. Or it could show us a thin dot of either color. Blue is still up, red is still down, but the fact that it's thin, that's the Auto Climate app way of telling us that we have a lack of probabilities, lack of statistical advantage there. So we tend to do nothing on those days. We don't want to trade when there aren't probabilities on our side, when we don't have statistical advantage. So again, we're using technology to help us with that and show us where the probabilities are and in which direction. So we'll look at that per market. What we'll also look at is propagating. Propagating is very much linked to the climate because it tells us how long we can expect that climate to keep going in that direction for. So on the right-hand side, this shows us what normally happens. So if we're in an upwards climate, how long does that market usually go up for in number of candles? If we're in a downwards climate, how long does that market usually go down for based on number of candles? So that's what normally happens. And then on the left-hand side, we see how many candles we've already been going in that direction for. So from those two numbers, we can figure out, do we have probability that the market continues in a certain direction? Or are we more likely, because we've come to the end of what normally happens, are we more likely to see a change in direction? Again, it doesn't tell us definitely or guarantee to us how long we can expect markets to move for or in what direction. It's just giving us probability, showing us where the statistical advantage lies, making it easier for us to make decisions. So that's climate and propagating. We'll go through that per market. By the way, just to say, all these numbers on the right-hand side, you'll notice they're decimal places. Whatever the decimal place is, I'm going to round it up. So whatever it says, I'm just going to add one. Then we're also going to look at nearest UFOs. UFO stands for unfilled order. And what that means is where we expect there to be buy orders in a market that are waiting to push it upwards, or sell orders in a market that are waiting to push it downwards. Again, we use technology to help us with this. We use the Auto UFO app, and it highlights on a chart for us. It analyzes market data and shows us where those orders are likely to be. So if there are buy orders, it will show us a green UFO. Looks like a little flying saucer. There's no sell UFOs on this chart, but I'll just show you what it looks like. We have a red UFO or a sell UFO if there are sell orders. So again, it's showing us red if there are sell orders, green if there are buy orders, showing us where those orders are. And what those orders tell us is where price is likely to change direction. If it hits a stack of buy orders, it's likely to turn and go up. If it hits a stack of sell orders, it's likely to turn and come down. And again, we're using technology to highlight for us on the chart, making it easier for us to make that decision. So we'll look at each of those per market. We'll also come down and look at volatility as well. So volatility means how far we can expect these prices to move within given periods of time, or how fast or how quickly we expect them to move. So we first look at current implied volatility, this column here. You'll notice each of these numbers are percentages. They refer to the expected move up or down in 1 year as a percentage of its current value. So what's the annual movement up or down in 1 year that we expect as a percentage of its value? From that, we can reverse engineer it and understand what that means in terms of the expected movement up or down in 1 day, in 1 week, and in 1 month. So again, it gives us an idea of what we expect in terms of up or down, how far we expect these prices to move within these periods of time. The climate and the propagating will help us figure out in which direction that's more likely to happen. And the UFOs will help us figure out where price might be likely to stop going in a particular direction and change and go in another one. So we are, again, using technology, probabilities, and statistics to help us make decisions a little bit easier. So that's what we do. That's the technology that we use. I'll show you for each of these 4 markets that we have, what the figures are, what the climates are, what the propagating is, and then we'll come down and look at news that we should be aware of. Okay, so let's start with the S&P, since that's what I've got here on the chart on the left. So with the S&P, we see here a thick blue dot on our auto climate that tells us we have a confirmed upwards climate probability to the upside. Now, usually the S&P would go up for 11 candles, and we're on candle number 11. So we have come to the end of what is the probability for a continuous move to the upside. That's not to say that we won't see a more continuous move to the upside. You know, unexpected things are happening, especially at this moment in time. And of course, things fall outside probabilities, you know, relatively often. But it would mean that we don't have as many probabilities as we would want to have. So yes, we have a confirmed upwards climate, but we lack probability of a continuous move up. Now, when it comes to orders, we have a stack of buy orders here. That is 33.48.42 to 33.23.69. That's the closest stack of buy orders that we would expect to push price up if price were to come back to it. At the moment, no sell UFOs. That's why that's blank on the newsletter and why we have nothing there on the chart. So in terms of volatility for the S&P, we would expect a movement up or down in 1 year of 26.49% of its value, which means up or down in a day of 0.59 points, in a week up or down of 1.29 points, and in a month up or down of 2.69 points. So that's the S&P. Again, overall probabilities to the upside there, but just bear in mind, we don't have as many probabilities of a continuous move up as we would like. Okay, let's move to the next market, which is oil. APCL, that's the continuous futures contract there for oil. So I'm just going to squish price a little bit so that we can see it a bit better. There we go. Maybe make it a bit bigger as well. There we are. Okay, so with oil, we have a thin blue dot. Kind of hard to see. It's a thin blue dot. That tells us that we have an unconfirmed upwards climate. So again, lack of probabilities, lack of statistical advantage. It means we tend to keep away. There's nothing much to do if we don't have probabilities on our side. Otherwise, it's just placing trades for the sake of placing them. So normally, oil would go up for 7 candles, and we're on candle number 1. So if it does confirm itself, we do have room for a continuous move up. But like I said, we lack probabilities on the climate in the first place. So again, nothing really to do there on oil for today. In terms of orders, closest stack of buy orders is quite far away there. Got 2 on top of each other. The top one is 26.56 to 26.05. Closest stack of sell orders, which is obviously much closer by, is at 42.86 to 44.03. So again, lack of confirmation on the climate, not really surprising considering price hasn't really done much over the last few weeks there. Sell orders closer to us, but not close enough to really have an impact today. Again, not much to be done there on oil. In terms of volatility, we would expect a movement up or down in 1 year of 46.07%, which means up or down in a day of 1.16 points, in a week up or down of 2.55 points, and in a month up or down of 5.31 points. So that's oil. Let's look at gold. That's the next market here. So at GC, once again, continuous futures contract there. And I'm going to make it bigger to make it easier for us to see here because we have orders closer by here with gold. I'm sorry, yeah, with gold. Okay, so with gold, we have a thick red dot. That tells us a confirmed downwards climate, probability to the downside. Usually, gold would go down for 3 candles, and we're on candle number 1. So we do have probability of a continuous move down. However, when it comes to orders, we have a stack of buy orders relatively close there at 1876.9 to 1851.0. We have a stack of sell orders, new stack of sell orders that's appeared there. That's 1928.9 to 1939.4. So with gold, we have a confirmed downwards climate, probability to the downside, plus room for it to move to the downside based on what normally happens, probability of a continuous move down. But we do have a stack of buy orders in the way that are likely to change the direction of price. So kind of 2 forces working against each other there, not lining up exactly as we would want it to. Again, overall probabilities to the downside with the climate, but bear in mind that you do have those buy orders in the way. In terms of volatility, we expect a movement up or down in a year of 23.17%, which means up or down in a day of 27.8 points, in a week up or down of 61.1 points, and in a month up or down of 127.2 points. Okay, last but not least, let's look at the euro versus the US dollar. That is the spot Forex currency pair. I am just going to squidge it together there so that we can see all these orders. There we go. All right, so with the euro, we have a thick red dot, confirmed downwards climate, probability to the downside. Usually, the euro would go down for 4 candles, and we're on candle number 1. So again, probability that it continues to the downside. When it comes to the orders, we have buy orders here. That's the top one, 1.1597 to 1.1507. And we can see here that we have obviously quite a lot of buy orders, one on top of the other underneath us. We have sell orders, again, new sell orders that appeared overnight there, 1.1813 to 1.1831. I've just rounded those where they need to be to the pip. So with the euro US dollar, overall probabilities to the downside, confirmed downwards climate, probability that it continues down, and sell orders closer to us than the buy orders are, which means, again, sell orders push price down. Overall probability to the downside with the euro. Just because something is probable doesn't make it definite. I say this all the time, but just because something has probability doesn't mean we just go do it. You might look at other variables, definitely manage your risk just in case. But again, as far as the technology that we use, overall probability to the downside for the euro. In terms of volatility, we expect movement up or down in 1 year of 7.43%, which means 55 pips up or down in a day, 121 up or down in a week, or 252 pips up or down in 1 month. Okay, so that's everything in terms of the charts. So let's now look at the newsletter and go down and understand the news. So we go to fxstreet.com/economic-calendar. We filter high impact news and US markets. So of course you can go to that link and change the filters, look at whatever you want to look at that maybe suits your trade plan a bit better. But for us, in terms of high impact news on US markets, we had some yesterday, but we don't have any again until Friday. So nothing today that is scheduled to come out that is likely to cause impact on the markets. Of course, sometimes things happen outside of expectations, so always be aware, obviously, that there's risk in that. But in terms of scheduled reporting, nothing till Friday. Now, when it comes to the news, we wouldn't necessarily make decisions off of what happens in the news itself anyway. The news is a reason why markets move, not the reasons why markets move. The most direct force we have to push price up or down are buy orders and sell orders. Buying and selling, that's what moves price. That's why we use our auto UFOs to show us simply where those buy and sell orders are objectively. Now, of course, the news can have an impact on buying and selling amounts. So, of course, we need to be aware of it. That's why we have this on the newsletter. But again, it is an indirect force. So bear that in mind. The most direct force we have anyway are the buy and sell orders. Okay, so that's everything for today then. Like I said, nothing coming up in terms of news for today. So for those of you that are within the channel that might be new, today being Wednesday means you have the future session at 9 a.m. Eastern, and then you have options at 1 p.m. Eastern. So we'll see you there if you're joining us today. Otherwise, I'll be back in the morning for the session tomorrow. For those that aren't already part of the channel, if you'd like to join us, go to tradictive.com/you-can-trade, and you can try us out for a couple of weeks there, see if you like us, go from there. In terms of courses, we have a course starting this Saturday in futures. That will be Saturday the 17th of October. That's this Saturday coming, and it's, I believe, 10:30 a.m. start. Any questions, email us at support@tradictive.com. Otherwise, I will see you in the morning. Hope the markets treat you well. Hope you have a good day, and I'll see you tomorrow. Take care, guys. Bye-bye.